Hi there, I'm Courtney Murphy, Denver Metro Realtor, and today I have Cameron Cook with Premier Home Loans here, and he is a wholesale mortgage broker. He's been doing it for over 20 years. I've worked with him before, so I trust him. He's always done a great job for me. I wanted to start bringing lenders in and helping you guys out because, especially with all the rate changes we've seen, a lot of people have more questions and we want to bring some solutions to you. So today, Cameron, we're gonna talk about some of the options that you all have to get a better rate when you're buying a house. So Cameron, let's talk about what people can do today.
All right. Thanks so much for having me, Courtney. I really appreciate it. So home affordability has really been a hot topic over the last couple of years as home prices have gone up as well as mortgage rates. It's really hindered the ability for a lot of people to be able to obtain home ownership. But there's solutions out there that can help people get into a home that make affordable payments. One of the more popular solutions these days is called a 2-1 buy down. Basically, what happens is that a seller will contribute money at closing on the benefit of a buyer, to which the interest rate that the buyer pays is reduced for the first 2 years of the loan. For example, on the board here, I have an example where if you had an interest rate, let's just say someone had an interest rate of 6.5% on their mortgage rate.
Okay.
The first year, the person would only pay 4.5% on their interest rate. The second year, the buyer would pay 5.5%. And then they're going forward they'd be paying 6.5% after the 2 years is up. So what really happens is it really helps people get into affordable payments to get into the home. And then of course they would be paying the full interest rate after the full 2 years is up.
Mm. So this is something that the seller has to pay for.
Correct. The seller has to pay for this. Correct. And in
Okay.
this market where the market's quite a bit slower, we're seeing a lot more sellers contribute concessions to buyers so it can help buyers be able to afford their home.
Mhm.
When the market picks back up, it's likely we're going to see a lot of these concessions disappear. For several years, we had a really hot market and we really didn't have these types of programs. They just really didn't exist. There wasn't much of a demand for them.
Yeah, we didn't need them.
Yeah, we didn't need them. But nowadays, it's more difficult to sell your house, and sellers have to be a little more lenient as far as what they're willing to do to sell their home. And this is a terrific solution because it's a win-win. It gets the house sold, and it gets buyers into payments that they are much more comfortable with making to buy the home.
Okay. So I have noticed in the MLS that there are sellers even offering this upfront more and more. So I think sellers are starting to look at this as a solution to help bring buyers in as well. So it's not so out of the ordinary.
Yeah, I totally agree. Again, it's for years we just never had these. These really they were always around, but there was just never a demand for them.
Mm-hmm.
So a lot of people really didn't know this even existed. But when the market flipped and it really became more of a buyer's market compared to a seller's market, these are becoming a lot more popular.
Mm-hmm.
So, 5 years ago, we weren't doing these. 2 years ago, we weren't doing these. These really just kind of came back to fruition just in about the middle of 2022.
Do you feel that that a home buyer should be comfortable with that rate that's sitting there after year two, that 6.5 in your example?
Yeah, that's an interesting question because I think that the person needs to be comfortable with this payment because worst case scenario, this is what they'd be paying in the event that they still own the home after the 2 years is up and they still have the same mortgage interest rate at that point in time, or they still have the same loan. But the real truth is that it's really not that practical for anyone to really expect to have to pay this type of interest rate. And the reason why is because there's a really, really, really high probability that mortgage rates are going to continue to fall. Realistically, what should happen over the next probably 6 to 18 months, so we're talking probably the middle of 2023 on into the end of 2025, is mortgage rates should gradually fall. And they should end up somewhere around 5%, somewhere in there.
Okay.
And at this point, realistically, anyone who's taken out financing now at these rates are probably going to want to refinance their loan. So the simple theory is that if you're able to get someone into a home now with affordable payments that they can make and refinance them before this benchmark even happens, or before this timeline even happens, they may not even ever see this interest rate. They may only pay, worst case scenario, they might pay this interest rate. So it really is more of a strategy or a financial plan, if you will, more so than just the interest rate that you're paying.
Not basically make sure you can afford that final rate there, but the likelihood you may not ever hit that rate because you can refinance when those rates drop. I was listening to an economist within the last week who made a really good point too, that 2024 presidential elections are going on, and typically we see rates drop because, obviously they want the economy looking good at that point and people feeling good, so we do have that coming up in our future. So, yep. So I hadn't thought about that, but that just bring that up, that
it definitely factors into what we do. There is an element to that is absolutely true.
Yeah. So, and that's going to be around the corner before we know it.
You're right.
So this is a temporary rate buy down.
Correct.
There are other types of rate buy downs, like, permanent for the whole loan, correct? So correct. What's the difference there? What's the better option? What do you think?
Yeah, so basically the way it works is that when you buy a home, you're going to have a certain amount of closing costs you have to pay. However, a lender is willing to give you a trade-off. If you pay the lender more money at closing, it's called discount points, mm-hmm. The lender will give you a lower interest rate permanently. So for example, if you had a 30-year fixed, let's just say you had a 30-year fixed rate loan at 6.5%. You could elect to pay more closing costs at closing, and the lender will give you a little bit lower interest rate, say, for example, 6%. The trade-off is that there's a certain amount of time that has to happen before it actually makes mathematical sense to pay more money to get the lower rate. Mm-hmm. Oftentimes, people will either sell the home or refinance their mortgage into a lower rate before that time period actually, before the break-even point actually happens. Mm-hmm. So it can be a good strategy for someone for the long term, but most often it's really not that great of a strategy. In particular, where we're at right now, because we know, or because we fully expect mortgage rates to continue to decline over the next several months, mm-hmm. The likelihood that someone's going to have a mortgage loan for several years is really, really, really small. So in my personal opinion, it makes way more sense for a buyer to get into a temporary buy down program, knowing that they're likely going to be refinancing before this even begins, opposed to electing to take a permanent buy down where they're intentionally increasing their closing costs and paying that extra money up front with the hope that they will have that loan long enough to where they can see a benefit of doing it.
Yeah, no, that makes sense. If we knew rates were just going to skyrocket and keep on going, and then I guess the permanent rate down rate buy down would make sense, but
I would
having
agree.
other expectations, yeah, that makes a lot of sense. Now, on the permanent rate write down, that's something that a buyer can purchase themselves,
Correct.
unlike the temporary. Okay, okay.
Absolutely.
I mean, yeah, I guess you can always have the seller contribute and go that route, but like you said, it just doesn't make as much sense in
Correct.
the long
I
run.
agree.
Kind of the
Yep.
bet there. Yeah. Okay. All right. Um, I, I can't think of any more questions. Is there anything else that you can think to add to the conversation at this point?
I think that for everyone listening, I think that people just need to realize that there's more to buying a home and paying for a loan than the interest rate. I think that there's a lot of misinformation out there in that people hear, mortgage rates being in the 6%, and at one point they were in the 7% last year. And it automatically leads them to believe that they have no way to be able to afford a home. And I believe that's not necessarily true. I think that's a misperception, if you will, because there are financial plans out there. There are payment plans out there, such as this, in which you can really make someone's payments affordable to them. But it takes a little bit of explanation. It takes a little bit of education and teaching for people to understand that, just because the interest rate changes doesn't necessarily mean that it's a bad financing plan, especially when we know that, mortgage rates are headed down and you're probably going to be refinancing soon anyways.
Mm-hmm.
So I think that people just need to understand there's probably good solutions out there that they may or may not be aware of, and that they really should talk with a professional to see what their abilities are.
Well, and I have to say, in working with you and starting to get to know your experience and your knowledge and some of the things I've seen you teach on, that's one of the reasons I'm bringing you on here. Is I want to let everybody know that I think Cameron is so knowledgeable and he has so much experience, and you have so many different options for people and different creative loan programs and so many different lenders at your disposal that you check with, and that I'm just impressed with you, and customers that have worked with you, I've just gotten rave reviews. They love working with you, and so I highly recommend, if you're looking for a mortgage, to give Cameron a call. I'm going to have his information in the video description so you can reach directly out to him, talk to him about your financial situation, see what options he can find for you, because you may be very surprised. And we're going to continue doing some educational videos where we're going to hit some different options, and you probably are going to learn about programs that you didn't even know existed out there to buy homes or move forward with investment properties, all kinds of building your real estate empire on the financial side of that. Cameron, I know that you have very creative options for people.
Well, thank you for saying that. I really appreciate the kind words. And yes, I'm more than happy to go through every option that someone could possibly think of, because you just never know. You never really know what's out there until you actually get educated. And I highly recommend people just take the time to learn.
Yeah, absolutely. So yeah. So thank you very much, Cameron, for taking the time out with me today. And everybody, subscribe to my channel, because you're not going to want to miss. We're going to start doing a series, getting more information out to you, getting knowledge to you so you can make the best decisions for you and your family. And yeah, thanks for joining us today, and have a wonderful day.